When you get a loan, who is the lender? 1. Hook overview. There's a theory that flips everything we normally believe about loans. It claims that when you sign for a loan, you're the lender and the bank becomes the borrower. So what does that actually mean? It means the entire idea of debt and borrowing is presented as reversed, creating a new way to think about how money is created. Footnote. This section introduces the main idea that the roles in a loan may be seen as reversed under this theory. 2. The common view of loans. Most people believe the bank lends you money and you must pay it back. That is the familiar story. The theory challenges this and says the obvious answer might not show the full picture of how credit is created. Footnote. This section explains the normal understanding of borrowing. 3. The reverse theory. The theory claims that your signature on a promissory note creates value. It argues that this note becomes a financial instrument that you provide to the bank. So what does that actually mean? It means the note is seen as something valuable that the bank uses to create new credit. Footnote. This section introduces the idea that your signature is treated as the source of value. 4. How the note creates value. According to the theory, when you sign the note, you create something the bank accepts as an asset. The bank then gives you credit based on the value of the note you created, not from its own vault. The idea is that the loan is not money the bank had before, but money created after receiving your note. Footnote. This section describes how the promissory note is believed to generate new credit. 5. Why the bank is seen as the borrower. The theory says the bank uses your note as its asset while recording the loan to you as its liability. So what does that actually mean? It means the bank may look like the party owing something because it accepted your valuable note and created digital credit in exchange. Footnote. This section explains why the roles may appear reversed on paper. 6. Securitization and the double payment claim. The theory argues that banks may bundle and sell promissory notes to investors. When the bank sells the note, it receives money for it. The theory then claims the bank keeps collecting payments from a borrower even though the note was already sold. Footnote. This section summarizes the claim that banks profit from selling notes while still collecting payments. 7. The role of the 1099-A form. Supporters of the theory believe the IRS Form 1099-A can be used to challenge the bank. The steps involve demanding the original promissory note, waiting for the bank to fail to produce it, and treating that as a default. Then the borrower asks the bank to file the form, which the theory says could show abandonment of the claim. Footnote. This section explains how the theory uses the 1099-A form as a tool to pressure the bank. 8. The claim about property ownership. Under the theory, if a bank files a 1099-A, it is framed as admitting it no longer claims the property. So what does that actually mean? It means supporters believe the borrower becomes the full owner because the bank no longer asserts a debt. Footnote. This section describes the belief that the form signals loss of the bank's claim. 9. The final reversal of roles. By the end of the process, the theory claims the borrower becomes the creditor and the bank becomes the debtor. The idea is that the bank used the borrower's valuable note, profited from it, and still attempted to collect payments. Footnote. This section explains the complete role reversal described by the theory. 10. Important reality check. This theory is highly debated and not recognized by courts or financial institutions. But it raises big questions that spark discussion. Problem, empathy, action. Many people feel confused about how money is created. They feel the system is unclear, and they seek tools to understand their rights. Learning how banking, credit, and legal processes actually work is the safest action. Footnote. This section clarifies that the theory is controversial and encourages informed understanding.